Wednesday, December 18th, 2019, Maneco 64, home of alternative economics and contrarian views. So Billy is back. He wasn't present yesterday on the video. Before I start today, I'd like to say that the Maneco 64 Teespring store has a 20% off promotion until the end of the year. Promo code is XMAS 2019, XMAS 2019. You can get stuff like mugs, Billy mugs. This is the time to retire the old lady of Threadneedle Street and shut the bank's doors mug. Of course, the old lady of Threadneedle Street is the Bank of England. So this is the end of Fed equivalent for the Bank of England. On the other side, I've got a quote from the founder of the Bank of England. And this is what he said, William Patterson, in 1694. And I quote, "The bank hath the benefit of all interest on all monies which it creates out of nothing." So there you go. Anyway, this morning, I want to talk about whether the gold reserves of the United States are safe, whether they've been audited properly, and why they wouldn't be safe. Before I go into that, I'm going to look at the markets. And one story in the FT I saw about the UK, I thought it was quite interesting. It's not only in the US that inequality is growing, it's all over the world, Western world especially. And this story came out overnight. 1 in 200 are homeless in England, charity reveals. Shelter urges action to tackle crisis in cities. So I'll go over the article a little bit here. It says the number of homeless people in England has risen to 280,000, with 1 in every 200 people currently without a home, according to housing charity Shelter. The figure is the highest since Shelter began keeping records in 2016 and marks a rise of 23,000 over the past 3 years, the charity said. It added that the problem is most acute in the capital, where 170,000 or 1 in 52 are homeless. And this is a quote from Pauline Neat, chief executive of Shelter. Homeless blight lives and leaves a lasting imprint of trauma, and yet 280,000 people in England are without a home this Christmas, and many are only days away from joining them. So I'll stop here. Feel sorry for these people, of course. So why is this happening? My opinion is, as most of you know, goes back to the monetary system and the crisis of '08 especially. What happened in the crisis of '08? Well, there was a housing bubble. Housing prices ballooned everywhere in the Western world, in the UK included, and then it all collapsed. And instead of letting the collapse take its place, our monetary and political leaders bailed out the whole thing, printed trillions of dollars or pounds into the system to keep the assets backing this housing bubble afloat. And one of the things that's done, it's also raised rents, because they had to keep interest rates at 0 or negative, as they have. People with savings, what do? Well, they bought properties and started renting, because you got a slightly higher income on renting than leaving money in the bank. The other thing that we've seen is a rising cost of living. We're told, of course, that there is no inflation, which is a load of baloney. And so housing costs haven't been allowed to correct. Cost of living keeps going up. The inflationary policy keeps debasing the currency. We've seen the pound go from above 2 in 2007 to the dollar, now to around 130. Yeah, we can't think that Harold Wilson, the former prime minister, who said, after devaluing the pound by 14%, he said, "Oh, don't worry, the pound in your pocket will still be worth a pound here in the UK." And we know that's one of the biggest how can I say, missteps, monetary missteps or misinformation from the former Prime Minister Harold Wilson. I think it was in 1968 when he devalued sterling by 14%. So that's what I wanted to show you there. The story about the UK. I know it's happening in other places. It's a little later today. I've got a bit more time, and the markets usually move a little more or are more active after 8 a.m. London. Right now it's 8:45 a.m. We've got spot gold at 1477.56. It looks right now that 1480 is the key resistance here in gold. We've seen that level be the high recently, quite a few days, right? The range overnight has been 1475 to 1478.50. Silver holding on above 17. We're up 3 cents at 704. The stock market, the Dow future is very steady, only up 7 points, virtually unchanged. Yesterday, markets were lower before the New York Open, but managed to eke out small gains, right? The stock markets. We're now at 28,273, the Dow. S&P 500 is up less than a point. The futures, 31.91. The NASDAQ 100 futures were up 1.5 at 85.75. So very quiet actually right now. This could all change, of course, as the day progresses. Sterling, we got kind of a case of buy the rumor, sell the fact, as sterling rallied from 131 to 135 on the night of the election when the exit polls came out and showed that conservatives were going to have a big victory. It went from 131 to 135. So that's buying the rumor, and now we're seeing a selling of the facts as sterling is at 131.20. It traded as low as 130.70. I'll show you an interesting chart of sterling before I go further here. You can see this trend line. This is in the daily chart, and I'll show you in a minute why it's important in the weekly chart. You can see we're testing that line here. So here's the weekly chart, and this is why this trend line is important. So right now it's pretty much at 131.17, 131.15, where we are right now. So that's sterling. The euro down slightly here this morning, down almost 0.2%, 111.33. The euro versus the dollar. The dollar is unchanged against the yen, 109.43, and pretty much unchanged against the Chinese currency as well, just below 7 at 66.99.60. WTI crude is down overnight, but it's up from where when I made my video yesterday. We're at 60.37 WTI. It's down 0.75%. The high has been almost up to 61. It was at 60.90. Brent is at 65.12, down just under 0.2%. Bond market fairly quiet right now. The 10-year yield is still relatively high compared to where we've seen it recently. We're at 187. That's down 2 basis points. So now the subject of U.S. gold reserves. This is a very interesting article I saw here. It's in a website called voimagold.com, and I'll put the link to it below in the description. It's by a Dutch reporter called Jan Neuenhuis. I hope I pronounced that correctly. Like most of you, I always thought that there hadn't been an audit of U.S. gold reserves since the 50s, but according to Mr. Neuenhuis, there has been. So I recommend you read the whole article. I've read the whole article. It's quite long and it's very detailed. You need to really pay attention to all the details. So the title is U.S. Official Gold Reserves auditor caught lying. So it's a pretty serious accusation. He says more false statements by the auditor have appeared, further eroding its credibility. The US, of course, is reputed with the reserve currency, of course, to have the biggest gold reserves of any country in the world, with 8,133.5 metric tons. And this amount has stayed pretty much at the same level for decades. So why is it important to know whether the gold is really there, the whole 8,133 tons? Well, in my opinion, if you do some homework about the 1990s, under the Clinton administration, we had a Secretary of the Treasury called Robert Rubin. Robert Rubin used to be the head of Goldman Sachs before he joined the U.S. Treasury in the 90s. At Goldman Sachs, he rose through the ranks through an arm of Goldman Sachs called J. Aaron, which was its gold bullion trading department. There's much research, especially by people like Gada, also the Golden Sextant website, which have worked closely with Gada, about how the U.S. had its strong dollar policy in the 90s. And what was that strong dollar policy? Well, it was the U.S. Secretary of the Treasury. He kept repeating that they had a strong dollar policy. Just saying it. And it continued through Bush Jr.'s administration, and to some extent under Obama, strong dollar policy. Well, the people at Golden Sextant at Gada, their speculation, and I think it's more than just speculation, they can prove it. And this article about the U.S. gold reserves makes me think that this is what was happening. The gold from the depositories for the Treasury, the depositories are Fort Knox, the Mint at West Point, and also the Denver Mint. They're the ones who hold the gold for the U.S. Treasury. According to this article from Jan Neuenhaus, there's actually an audit that took place from 1974 till 1984. It should have been done in those 10 years, in which every year they audited 10% of the reserves, and then they sealed where that gold was. And if the seal wasn't broken, that meant that the gold was there. And so they could do that over 10 years and how can I say, audit the whole 100% of their reserves. And we know from looking at the US gold reserves, it's been like unchanged for many years. They didn't have to audit it again. But according to Jan Neuenhaus, he's done a lot of research, and I really recommend you read this. Don't take my word for it. There have been instances where thousands of tons have been moved and seals have been broken. And he talks about a testimony of one of the auditors in 2011 to Congress. And guess who was questioning him? Ron Paul, in which he was economical about these seals. And why is this important in terms of the strong dollar policy? Well, my opinion is that a lot of this gold has been used to keep the price of gold controlled. How do they do that? Well, they lease the gold to the bullion banks in New York, in London, Hong Kong maybe as well. And these banks, they take this gold and they sell it into the market. And a lot of times they leverage it. Especially in London, they rehypothecate it many times over. In New York, there's a limit to rehypothecation. That's why London is the center for this shenanigan of gold leasing. This is why I think this is happening. They lease the gold out. And that's why it's moving out of the vaults. That's why the seals are broken. And he did his homework. He got freedom of information. He used the Freedom of Information Act to get a lot of information from the U.S. Treasury, from the mints, everything. There's been a reluctance of the U.S. Treasury, U.S. government to come out with transparent information regarding its gold reserves. And I think it's because a lot of this gold has been used to be leased into the market. Is the gold gone? Not necessarily, but if there was to be a real official audit conducted by U.S. Congress, they would have to probably close out all the leases, bring the gold back, and that would probably put a rocket up the price of gold. So highly recommend this article. If you enjoyed this video, make sure you hit the like button. Subscribe to the channel if you haven't yet. You can also follow me on Twitter, BitChute, Steemit, and on DTube. I wish you all a great day. Take care. Bye.